Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we've only got a couple of weeks to go, and in fact, this will be the last week of active trade for the portfolio, won't it?
Yeah, it will. I'm going to close off all trades at the end of this week, and then whatever's left in our portfolio by the end of this week, whatever profit we've made will be donated to charity. So this really is the last week before we've got to wrap things up.
Okay, so let's look at some of the open trades that you still have, because in fact you do have a fair number.
Yeah.
And let's start off with Standard Bank, which was a trade that's you kind of felt slightly iffy about in a way, and you know, you could have been accused of average down, but it was part of your strategy. So what's happening there?
Yeah, okay, well, let's have a look. The chart of Standard Bank is up on the screen at the moment, and what I'd really seen here was the fact that the stock had broken out through this major overhead resistance at 120 Rand. Now, this chart only shows the trading action for 2013, but if you go back further, you go all the way back to 2007, in fact, you'll see that 120 Rand has been a massive resistance level for the last 6 years. And the fact that it's now finally broken out through that level is very, very bullish. And what I see is the fact that the stock is basically broken out and it's just giving a pullback to, you know, what was previously resistance. Now that area should become support. And it appears that this consolidation or pullback that we're seeing over the last month or so is taking the form of a falling wedge, or you could perhaps call it like a bull flag pattern. Either way, it's a very healthy, tidy consolidation. And now what I've done, I've gone in two tranches, and collectively I've bought 1,520 CFDs at an average price of 122 Rand per CFD, with a stop loss at 118 Rand. So that means that if our stop loss was to get hit, we'd lose 6,000 Rand on this trade, which is a very comfortable amount in terms of our risk parameters. Now, you know, strictly speaking, I probably should really have waited for a breakout through the top of that wedge structure, because that would give us a far higher probability trade. But you know, I'm looking at it in terms of getting my risk to reward ratio as beneficial as possible. And you can see the red and green block on the right there illustrates the risk to reward, with the red block being the risk. That's the difference between our entry price and where our stop loss would trigger. And then the reward is basically from our entry price back up to the recent high, which was at around about 130 Rand. Now the big question, of course, is will we see that target reached in the next week? Because we've only really got until this week, Friday. And then I'm going to look to close up shop for the year. We will still run a few additional shows out to the end of this year, but for the purposes of this portfolio that we've been running all year, I need to wrap it up and consolidate the profits and give it to charity. So we're going to do that come the end of this week. So I'm not sure that we're going to see this Standard Bank trade work out for us in the next 3 or 4 days. But you know, even if we look out further, I still think this is quite a good looking setup, and I think that for next year this is a nice stock to keep an eye on, because I do think that breakout through 120 Rand is actually very bullish.
Because it has been a rather choppy few days on the market. In fact, today is looking very, very soggy indeed. So in that context, you've got an option on the top 40. In fact, I mean, we'll take us through where we're at there, because you're hedged either way,
Yes.
if we have a huge rally or if we have a collapse.
Yes, well, I am. So let's just have a quick look and revisit this. And I know I've done this a couple of times through the last quarter. Any viewers who didn't see how we constructed this option structure can go to traderscorner.co.za. In the multimedia section there, you can see all the previous TV shows that we've done. And you can look up the one that's where we describe in detail how we constructed this option structure. But basically the payoff of the structure is shown over here. And effectively above 40,000, we pay away an options premium of 2,618 Rand, and then below that, our structure starts to make money for us. It makes money all the way down to 37,000 on the top 40, and then if it starts to give back that profit gradually, and it only starts to lose money below about 34,350. Now the thing is, what I did with this structure a couple of weeks ago was I actually went long one Aussie 40 future against it. I've got 2 put options which are struck at 40,000. So basically, if the market starts to move down below 40,000, then those 2 put options will start to work for us. But what I did against it was I bought 1 top 40 future. And if you think about that, I've got effectively long one and short two below 40,000, and the short two and the one long kind of offset each other at the lower levels, right? So if you look at that chart as it is now and that payoff, watch what happens when I now include this one futures contract. It looks like that. So we've got effectively a V-shaped payoff from around about this 39,800 area. We've got a V-shaped payoff. If the market goes lower, we start making money. If it goes higher, we will make money as well, which is a very nice situation to be in at this point in time, especially given that the market is rather sort of uncertain at the moment. Yeah, and it's choppy and it's a bit difficult. And I suspect it might stay difficult until the Fed meets on the 18th of December. So I think having this structure in place for now is actually not a bad place to be. It gives us exposure to both sides. And if you think about where the market is today, we've got it trading at, the futures, the top 40 futures, been trading down as low as 39,300. Which is more or less where that yellow line is. So we're starting to make a little bit of profit on the downside on this thing. Of course, the worst case scenario is that the market
does nothing.
Yeah, if the market was to settle in this 39,800 area, then we would, I suppose that's the worst case scenario. But we're not going to lose money really on this thing. When I say we're not going to lose, we've paid away a small premium, but it's not a lot of money.
It would be very irritating, though, if that happened.
It would be exceptionally irritating. But, you know, we don't have control over the market. No. We do our best, and we've given ourselves sort of exposure on both sides, as it were. So we're going to just see if, as long as there's movement in one direction or the other, we'll make money on this structure.
And the market doesn't care how we feel about it.
It doesn't care about anybody's feeling. It's a totally unemotional thing. But just on the top 40 now, if we have a look here, you know, I know last week we spoke about the possibility of a Santa Claus rally, and everybody goes on about the Santa Claus rally, which I must say I'm skeptical of thinking it's, you know, foregone conclusion just because it happens most years. But, you know, statistically it does happen most years, so we can't ignore it. But it, you know, there's going to come a time when it doesn't work, and that's what we've got to be careful of. What I've been seeing here on the top 40 was that we're making this falling wedge structure, and I showed this last week, and I said at that point we would need to break out through 40,100 in order to validate this wedge, and that could then project us, you know, back to our prior highs. Now the thing is, first and foremost, it did break out, but it's been feeling very, very soggy over the last couple of days, as you said. And today we're trading back underneath 39,500 here. So I'm not sure whether this breakout is now a failed break or not. I'm a bit uncertain. The one thing that is a little bit concerning is if you look at that dotted line there, you can see we've actually broken that trend, which goes back to the June lows. So yeah, it's hard to say. One might argue that this rally up was just basically a retest of the underside of that previous uptrend, and now we're making another lower leg. Look, I don't know, but anyway, the bottom line is with that option structure that we've got, if we go back and look at that payoff, we've got exposure both ways. So whichever way it goes from here, we're actually sitting in a relatively comfortable situation at the moment. Yeah. The futures close out for the December quarters on the 19th of December.
So it's the day after the Fed
It's the day after the Fed decision, and it's also that, you know, that's some 2 weeks later after we will have closed off this portfolio for the purposes of donating the profits to charity. So what I'll do is whatever profits we make, assuming that this market does move one way or the other, whatever profits we do make on this structure, I'll then just add that additional portion onto the start of next year's portfolio. Okay. So we'll start with hopefully a little bit of extra money in the kitty at the beginning of next year.
So it won't be reflected in this year's gains?
Look, I'll reflect it to up until this week Friday. Okay. And thereafter, whatever we make in the following 2 weeks thereafter, I'm going to look to add to next year's trade.
Gus, do you have any, I suppose, feeling as to why the market is so soggy? Any understanding as to what's spooking it at the moment? Is it maybe a suspicion that a tapering is going to be announced at that Fed meeting?
It's possible. There's certainly been some talk around that there's a potential for them to begin tapering in December. We'll see whether that in fact transpires or not. But I think that's possibly what has got the markets a little bit skittish at the moment. Also, don't forget that equity market valuations, particularly on our market, are actually quite high. So, you know, a bit of a correction is not to be unexpected. And I think at some point our market will probably pull back 10%, and that'll be a nice, healthy correction. It would cream off all of the froth that's in our market. It would get us back to slightly more reasonable valuation levels, and it probably would set up a nice buying opportunity. But we've been on a tear in our market for the last nearly 6 months, without any major pullbacks. So it's not unexpected to get a bit of a correction at some point.
In fact, I think yesterday certainly we were down only about 3% from our highs of the year. So we have added to that somewhat significantly today.
Yeah.
But Garth, the one sector of the market which maybe is worrying and justifiably so is the metal sector, and certainly I mean looking at shares like Anglo Platinum over the last couple of days, they've been punished. Are you a bit concerned about what's going on for precious metals in particular?
Well, those stocks aren't looking great. I mean, when I did an analysis of the whole market last week, I looked at stocks like Anglo American and Assor and African Rainbow Minerals. Those were three.
Or did you just restrict yourself to the A's?
Well, those are the three that sprung to mind at first. I suppose are the ones that stick in my memory the most clearly. But I mean, they're beyond that as well. The gold shares are looking sickly. The platinum shares are a bit iffy. And if you have a look at what's happening in these precious metals markets, you start to understand why. I mean, this is the gold price at the moment. Now, it's been in a downtrend for the whole of 2013. You can see recently we bumped up against that downward trend and we've started to trend lower. Now, to me, there's basically no further support here until this previous low, which we set in June. And that's at about $1,120 an ounce. So that's about, it's only another $30 down from here. But if I just look at that chart, that to me looks like a pretty sick, unhealthy looking chart. And similarly for the other precious metals, if we look at silver here, notice again there's a very steady downward trend that's been in place over the whole of this year. What I'm also potentially seeing here is a triangle formation that has resolved to the downside. And if you believe that these triangles are continuation patterns within a downtrend, in this case, you take the height of that triangle at its broadest point and you then project that distance down, and it could give us a target price of around about $16 an ounce for platinum. So
silver, you mean?
Sorry, for silver rather.
Jeepers.
Yes.
You don't want to start a panic out there, God. Okay, it's for silver. Well, that is still a bit of a panic.
That's not looking good at all, I don't think. And then if we look at platinum, now this has been very, very choppy throughout the year. But again, there's a very steady downward trend that's been in place for the whole of 2013. It also has broken below what you could also consider, I suppose, to be a triangle type of structure. And that also, I see no support here until these recent lows, which was at about $1,320 an ounce, and potentially even lower. Wow. So this doesn't look good. From a precious metal standpoint, this really it doesn't look like a healthy picture at all.
Well, I was going to ask, why would it be the case that a previous low would be the support? Not necessarily. Huh?
No, not necessarily. I mean, you might find that it could go below that. It's just that at a point where you saw a previous low, we call it a pivot point, and it is often considered to be a potential support. It's not to say it will definitely hold, but it's the first area of possible support that we look at.
Okay, so precious metals looking decidedly ill and clearly not tempting you in any way in the last few days into anything rash. So Garth, what does the portfolio look like then in the run-up to our own closeout? All
right, so we're looking good. We're close to all-time highs now on our portfolio. We're sitting at 378,583 Rand. So that's up 51.5% for the year to date. Remember last year we did 53%. So that's the target that we've got in mind. We've got a few days left to try and beat it. But we're there and thereabouts. It's been a hell of a good year, irrespective of which way you look at it. These are the positions we've got open. We've got our top 40 option structure, which I described, where we're actually making a bit of money on that. We're 2,182 Rand to the good here. We have this Aussie 40 futures long position as well, which offsets against that option structure, right? We're making a small loss there. And then the Standard Bank position is still open, and we're actually running a small mark-to-market loss there as well. So let's see. We've got a few days left, and I think we're relatively well positioned. That Standard Bank position is causing me a bit of angst because it is not looking too good. It's not feeling very well bid at the lower levels. But that option structure certainly is a nice place to be because it gives us a V-shaped payoff, whichever way the market moves.
Yeah, okay. Well, let's hope something happens to help us eclipse last year's total performance, which, as you said, was 53%. Guys, we have to leave it there, and next week we will be donating the profit that we make to charity. So I hope people tune in for that. So thanks as always for joining us, and chat to you next week.
Great, thanks.
That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.